Yo, 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 what's up? Welcome back to another day of streams. Just gonna obviously wait another 15 minutes for people to join, but welcome Keel, welcome Bit Me Some. Hello, Jack. Jack, you're always here. You have nothing to do in the evenings? What music should I use? Royalty-free lo-fi. Easy Pips, hello, hello.
You skinny fucks. Now welcome back to day 2 of the Rings and Gold. And today we're just to get more processed.
Ah, fair. Easy Pips, why are you saying welcome? Are you welcoming everybody into the stream? Nah, Jack, what the fuck, man? I need to have at least one mod here. Ah, you're welcoming me. Thank you very much. Thank you very much for. I'm happy to be on your stream, Easy Pips. Can't wait to see what you have in store in terms of a breakdown today, guys. Oh, we're at 12 people already. How many people in Zoom? Zoom link sent? Yeah, it is. Cool. We're just 14 minutes away. I ordered some Papa John's just now, and they had this deal going, which is like what, two large pizzas, 2 sides, and a drink for like £30. And then they got one of the pizzas wrong, so they're re-delivering it. So if in the middle of my breakdown I have to go and collect a pizza, I'm just gonna have to go collect a pizza. There's nothing I can do about it. I told them they gave me the wrong pizza. They gave me a Hawaiian, and I was like, I'm sorry, mate, I'm allergic to pineapple. Well, I'm not, right? But I just wanted another free pizza, so I just told them, yeah, I'm allergic. And they got it wrong, right? So, free pizza for me. I'm gonna have to call up Cam to help me finish it, though. How's everyone doing? Last breakdown of the week, and then you're going towards Friday, then the weekend. Good. How's your trading week been? What's everybody up in terms of percentages? I need to check as well. What am I doing for this week? Last week, I'm up 2.5%, 2.6. It's not bad. Welcome back, everyone. Welcome back to the last day of the streams until Sunday. Oh, there's my pizza. Good timing. Gonna be starting in about 11 minutes here, guys. I did always do this actually. Look at that. I'm not enjoying this music. I'm gonna have to change. Tokyo Girl Chill vibes. Hell yeah. No, I'm gonna go back to the classic. Yo, yo, yo. Welcome back, everyone. Ow, what does that mean? Waffen Akhe Imgribi. Lovely. What language is that? Let me just Google translate that real quick. My brother's art is from Morocco. No idea what that means, man. Ah, okay, okay. Yeah, Moroccan producers. Oh, yeah, I've actually been to Morocco. It's pretty sick. Am I using ICT? No, I use pure price action trading, technical analysis, and just my eyes. The EYES strategy. It's really underrated, guys. Yeah, we got 14 people here, but 4 likes. Like up the streams, guys. You're about to get some free knowledge. Yeah, the EYES strat is pretty strong, not gonna lie. DonVo used the same strat. He's made 1 mil, right, in like, what, 11 months? I would say it's pretty strong. Yeah, EYS. I feel like I've chosen a pretty good time to stream actually. Like after, the markets has done their thing for the entire day, you kind of have like a whole review session of what happened in the day. Because the market's not moving, you can, take a step back and understand, okay, where do we go, right? What did price do? And then it's kind of like a clearer direction for the next day. So glad I chose this time over like the other options, which was like either pre-New York or like whatever. Ah, I see, Jack. Yeah, that makes sense. Yeah, it's usually, I find it relatively useful just reviewing what we did throughout the day. But Jack, you trade London as well, right? You get up really early. Do you ever get like jobs in the morning? Is that why you wake up so early? Oh man, I couldn't trade London even if I tried. Like 6:30 in the morning? I don't know how Don does it every single day. I guess his sleep schedule has been just like that for like 5 years, right? For me, like I've got work from like 9 till 6 and then I've got this to do, right? I can't, if I want to wake up at like half 6, I have to sleep at what? Maybe like 9 p.m. And then I probably fall asleep at 10 and then I'll get my 8.5 hours if I can, right? But if not, then it's just like I'm just not sleeping enough. make sure to grab some liquidity before the streams, guys. Starting in about 5 minutes, guys. Oh, have I unmuted everything? Yeah, okay. Everyone can hear music, everyone can hear me. Zooms as well, right? We all good? Do you take trades sometime at this time? I used to. Like, I would say maybe 3-4 months ago, I was trading Asian. It's difficult to get into a trade pre-Asian though, because the markets haven't done anything yet, right? And at any given point, especially on a Sunday, right? If you get into a trade right off the bat, you could have had like a bit of a gap. So where do we have gaps previously, right? What was the biggest gap we've had? I think it was like this. This was a gap, right? The markets just opened after on like a Sunday night, just like this, 200 pips up. So it's like after this happened, you just have to wait. There's nothing you can really do. You wait until price kind of settles in this range, right? Then you get a liquidity grab to go up. But like you can't really do anything pre-Asian, I would say. It's more just a kind of review session. But yeah. Turn the music down a bit. I think just in general, trade when there is volume, right? So Asian, London, and New York. And then also, make sure that that kind of time fits in with your schedule. Like you don't want to be trading when you're like actually supposed to be sleeping. So that's what I was doing previously, right? I would stay up really late for Asian. And then like occasionally I'll be in a trade at like 1 a.m. and I'll get out of the trade at like 3 a.m. But it's like, well, do I want to be in that trade? Am I like sacrificing my sleep so that I'll have a slightly, more tired day, and then I'm trading New York sessions slightly more tired as well, right? Am I going to make the best decisions when I'm tired? So that's kind of what you have to balance. Like you have to integrate it into your own schedule, but it has to make sense, right? You can't just stay up for all 3 sessions unless you're in Thailand or whatever. Yeah. So if you're in the UK and you just trade, that's fine, right? Because I'm in the UK as well. So if you're trading Asian, that's like, sometimes you don't trade till like 2 or 3 a.m. And then I've got work in the morning at like 8:30, right? So I can't really trade Asian consistently, and then I can't trade London at all. Because if I traded London, you guys are going to get a stream, right? But we're getting there. So starting in about 1 minute. Why do you guys get up so early, Jack? Just like, has London volume been good recently? Like, I feel like New York's been pretty good in terms of volume, right? Or like, pre-New York, like London into New York has been pretty good as well. So I haven't really needed to, get into more trades. I've had basically like at least 1 or 2 trades a day. Like at least for this week, I guess. Right, cool. We got 22 people here. I'm just going to start. Cool. So welcome back, guys, for another analysis. This is the last day of the week, right? So the monthly is at basically where it started off. You're like 10-20 pips away from where it opened, right? So very interesting situation now, right? Your monthly is looking like it might flip. If it's going to flip, where's it going to go, right? Looks like you're going to head up towards these highs. If you start flipping, you might get a closure, which is, you might, like, in terms of the monthly candle, how is it going to close? It could close something like this, where you have a bottom wick and then you have a closure like this above the range, right? But you have, a top wick maybe up to these sorts of areas. So if your candle closes like this, that's fantastic, right? Because then you still have this range from here to fill, right? So at any given point, what we can expect is the bottom wick and then start driving back up. So in those cases, right, we can look to take those buys to go up, but firstly we'll need that breakout on the monthly. But at the moment, the monthly is looking like it's created that bottom wick. It could be flipping, right? So if we drop down to the weekly, we're understanding that the week is going to close in 1 day. How the weekly is going to close is very important. Is it going to close above this range, or is it going to close, like respecting here still? Because if it's still respecting this range, any given point, right, price can just start driving down because you haven't broken out of the range. And then in that case, if price does actually start driving down, then you'll have something that looks like this for next week. All right, so if you close respecting, you can have something which breaks the highs, right, and then potentially starts coming down, right? But regardless, we're still looking for it to break the highs because it needs liquidity if it wants to come down, right? And if it wants to go up, perfect. This might be enough liquidity. We broke down on the weekly multiple times, I think this week, that potentially, the last time you failed to break above 2010, 2009 sorts of areas, we were mirroring this sort of structure. So in this case, price grabbed liquidity here, right, at around 1930. We also came down this time, and now we're flipping bullish, right? So if we're imitating the moves starting to go up, you can expect the candles to, the monthly to flip. You go get closures above these ranges, and once you get that, you're pretty clean to start driving up, right? So I would say anything above 1990, 1991 sorts of areas, you're pretty clean to drive up to at least 2007, right? If you get like a weekly closure above here, you're good to fill the range up, right? In any given point, right, this could have been a fake out to come up, right? Because you broke out of this range on a closure, and now you're closing back into this range. It's likely that you're going to be closing back into this range. So if that's the case, just clear everything. Right, so what's wrong with my mic? You guys can hear me, right? Don't think there's anything wrong with the mic. Is it not loud enough or something? Too quiet. Okay, that's the loudest I can make it now, so good luck with that. So the weekly, essentially, I would say you had a level, somewhere towards these areas which you were respecting, for this week, and then for the 2 weeks ago, and you also had a level around here which you did respect, came down, broke all these lows, right, and then you started flipping bullish, right? So how this weekly candle closure is very important, right? If it starts closing below or like respecting these sorts of areas here, right, at below 1965 or even below here, then, right, at that point you might be thinking, okay, is it going to come down? There's a high chance, right, because you might get the celery to come down, and this could be a top wick to start coming down. So that's the weekly. Let's look at the daily now. So both at the moment, weekly and monthly, I'm still very bullish, right? Your daily closed bearish yesterday, respecting. So we mentioned we were extremely bullish because at any given point, the weekly has tapped where it needs to grab liquidity. And now if it's going to drive, it's going to drive, right? It's going to drive past and potentially start retesting the highs because it has enough liquidity now. So if it starts breaking above 2008, you're very good to probably drive up to like 2029, 2030 sorts of areas. But that's if you get that closure above, right? Any given point, you could, potentially break these highs to come back down, as we mentioned just now for the weekly. So still be careful, but it's looking like, you've made your lower low. You've sort of like this structure here, you ranged here, it's broke below, grabbing liquidity, and now you're looking to flip bullish, right? So the daily for me is still relatively bullish. I would say you have unfortunately closed respecting this range here though, which indicates you don't have enough liquidity to continue driving up yet, right? But this is the daily time frame, right? So we might get a bottom wick for the next daily and then a breakout on the next, right? So Friday's candle, and then for the next week, this could be the start of some bottom wick and then start driving up, right? So that's what we might see, I would say. In terms of closures above, once we get a daily closure above 81, right, in these cases here, right, after grabbing liquidity towards these sorts of areas, right? So again, liquidity around here, right? Once you've grabbed that liquidity, I'm going to put it around here actually. So I think this was our level at 1940. So you've grabbed the liquidity here. Cool. You did a bit of fake out here. You started filling the range. But any given point, you could, just respect like this candle did, right? You respected. So where are you going to grab liquidity next, right? Potentially breaking these lows here. You made some lows around here. You made some lows around here. It's pretty clear, right? But you still didn't break out of the range. So maybe you need to come back down once more towards about 1949. 1950 sorts of areas, and then look to flip, and then once you get that closure above, smaller bottom wick to go up, right? But that's after you've grabbed liquidity breaking the last couple of dailies. If you just get a closure above now, right, we'll look for a steeper bottom wick, right? Likely somewhere towards these sorts of areas before you're able to drive up, 1969 sorts of areas. But we'll see that as it happens. Currently your daily hasn't closed above, so I'm still bullish, but I'm understanding that there's a high chance you need to grab more liquidity to come up, right? Last time you were bullish, you didn't close above, grab liquidity towards these areas, so the buys around here are not bad, even though they're very far away, 1953, because you are at 1981 now. So I'm bullish, but I'm understanding like I need some liquidity. So the job of the 4 hour, 1 hour, whatever, is for us to try to find those areas of liquidity, right? So I am going to just drop down to the 4 hour and mark up some ranges there. So your 4 hour, you actually got a closure above, right? But you got a closure above, but respecting here, I would say overall. I mean, the 4 hours a little bit like what happened in the previous 4 hour around these sorts of areas. That's what I'm interested in. You got a closure above here, but you didn't drive. So where is that level I'm looking for? I mean, this is not too bad of a level, to be honest. Yeah, it's not too shabby, but you also have a couple other levels around like here, I would say. Yeah, 1985. What does that look like for current price? 1985. Yeah, it's not too bad. I'm liking this level as well. So I would say currently on your 4 hour, you're probably respecting 1985. Indicating that, okay, cool, you don't have enough liquidity to break above, right? And you also closed respecting 81, I think just below the level, which means that you might get a bottom wick, some of this to happen, to start going up. Where that bottom wick is going to be, I don't know, right? Because you've basically tapped into these areas, but you closed respecting here, right? So something similar to this. If it does start driving down, I'll be looking for entries around these sorts of areas at 50, 50, 53, as we kind of explained just now. But generally, right, we're looking for liquidity. That's what we're looking for. So yeah, so on the 4 hour, I'm actually going to get rid of this. Well, no, I'm going to keep it, but I'm going to move it. I'm going to see on the hourly. Let's try to define this level a little bit more. So you could get a fake out to start going up, but let's see where that level is. Yeah, all of this is so messy, guys. Not the most ideal ranges, but let's have a look to see what we can outline. It's not too bad here. Drop down to the 15. So what I'm looking for is just last times, the kind of times that price respected certain areas, right? If you respect it, it's indicating that there's a high chance that price is that's like a strong level that price may reject that again. So that's just what I'm looking for. In terms of what I can find though, it's not looking very, very clear, I would say. Yeah, okay, cool. I'd say in terms of, just for simplicity, right, you're in this range on the 4 hour. Anywhere from between 1985 and here. So that's what's simple, right? So what I'm expecting is that price is going to struggle around here, right? Because you just had this massive push. This was clean traffic, relatively clean traffic, all the way up to 1987, right? So now that you've tapped into these areas, right? Cool. You've already, exhausted all of this clean traffic. So you're going to start ranging here, consolidating. You might see it, come down to these sorts of areas and tap, right? But what I need to see is price respecting this level, right? So price needs to respect 1976. At the moment, you got a hourly closure below 1981, bullish respecting. So at any given point, you can come back down to fill the range. Similar to all of these times, all of this, even this, right? You came down to drive down to 1978. So there's another smaller range there. But as you come down, what I'm looking for is price to respect, right? Looking at all of this, price to respect. All of this as well, right? Like you're just respecting constantly, like even this. And then once you respect, I'll look for a bottom wick. A bottom wick where? Approximately in 73, maybe towards these sorts of areas, around 72. Looking for buys around here. So why am I looking for buys around here, right? And is it going to tap? Not necessarily, right? What I am expecting though, right, is price to do this. You've now closed below, so maybe coming down to fill the range, something like this, right? So at any given point, if you're respecting 1976, cool. You get a bearish closure respecting, bullish closure respecting, right? Indicating you have found support. If it just comes down, right, I'm going to take that buy to go up. Any given point, if it wants to start going down because you haven't broke all of these highs, you're breaking these highs to come back down, right? So we can take advantage of that move there. But if it breaks these highs before coming down, I can't take the buys there. So if it does something like this, where you have a range, breaking the highs and then coming down, I cannot take this position because at any given time, this is enough liquidity for us to drive past, right? And you might even come down to these areas, or you might get a breakout below and start retesting these lows towards here, right? Down at these sorts of levels. So obviously, if we do ever come down to 1950, 1953, I'm just going to take a buy, right? Because you've broken all these lows. If you want to continue down, you're going to need to grab liquidity to go down. But if it does flip based on the weekly, the monthly and everything, then it's going to be a pretty clean position to start going up. But at the moment, right, I need more structure to be formed. There's not as much structure as I would like. If it does start closing back into this range though, right? So in the case that, so player 201, I think, don't you have zoom access? Let me have a look. So for example, you get a closure back into here, right? You're ranging here, similar to all of this. If it starts respecting all of this, you get a breakout above, and then you come down. I'll look for the buys around these areas, right? So around 1979 sorts of areas, just breaking all of these lows, 1979 to start going up, right? So if that happens, I'll take a buy around here. But I'm understanding that if you are taking a buy here, you need to see structure, right? And the structure for in this case is you're going to be breaking above the range and then coming back down to start going up. So that's what I'm looking for there. Yeah, understanding that, last time these you didn't respect, right? These ones you didn't get a breakout. You didn't get a breakout above, so you came down further. So you're looking for the buys around these sorts of areas. I think your buy level is anywhere between like 73, 72. But I've put it at 72 to be safe. But for example here, right? You had a breakout above. You're looking like you want to go up. Suddenly came down, right? And this is likely to be a liquidity grab. You had a wick fill, a range fill down to these sorts of areas. And then you just kind of spiked down to 1979. You probably didn't need to take the first one, but let's zoom into this little bit, right? What happened here on the 15th? Let's have a look. So could we have taken positions here, right? So you came down, filled the range, came back down, right? And then you closed above the range. You closed above, but you didn't break, I would say. After that, you had candles which never broke these lows. And then you came back. I probably wouldn't have had a position here, but as this created a top wick here, right, I'd probably be looking for a break of this next top wick to start going up, right? Because you've grabbed liquidity, right? If at any given point you're going to start coming down, right? If you don't come down, you start reversing, then it's probably, once you break these highs, you're going to start driving up, right? And filling the rest of this range, which is up to 85. So anywhere from 83.4 to 85.4, 20 pips, right? Pretty good advantage point there. So that's what I would have taken here. I couldn't have taken the buys here, right? So it depends on structure very much, right? But in the case that with current structure you respect 1981, yes, cool, you get a breakout. I'll look for those buys there. Let's look for sells. Let's have a sells. Oh, you don't have a mic yet? You don't need a mic, man. You have a computer, so you can just speak into it. But yeah, man, like, ask questions on the Zooms. You should definitely join up. So cool, you're respecting all of this. Did we grab liquidity to come down? That's what I'm asking, right? So in these cases, I would say I actually want to look first at what happened previously in these sorts of areas. You can join my Zoom if you join DVS membership. So I think Nightbot posted something like that, but just message me on Instagram to find out more. So cool, you're respecting what I'm going to do actually is a bit of this. So I find this relatively useful sometimes. So understanding that what I'm looking to mirror is this. Where have we closed? Where, you know, let me just remove all these drawings. I don't know why these drawings don't sync up. It's so annoying. So cool, you have a level here, you have a level here, a level here, level here, and a level here. Cool, right, so you haven't closed above 85, so all of this. If you now break these highs, I'm looking for sells. Oh, but you've already tapped, so I can't look for those sells. In any case though, if you do come up to these areas, so you break these highs at 1990, I'll look for those sells. Why? Because at any given point, right, if price doesn't drive down to at least 79, or, you know, like 79, I would say, like, at least, if it doesn't drive down to 79, I can't get into buys to start going up, because I'm understanding that price needs liquidity to start going back up, right? So in that case, if I'm seeing structure potentially being formed where you're respecting 1985, right? So in the case where price is doing like something like this, where you're respecting, suddenly just wick up, I'll look for those sells to come down, right? That's case one. Case two is where you have something like this, where you have this, a breakout, and then a liquidity grab to come down. In that case, it might be slightly lower, right? If you get a breakout, you might get a, you know, you might not even break this high, but somewhere breaking all of these highs would be fine as well to start coming down. So anywhere between like 86 to 90 is fine, I would say. But it needs to be like pretty strong structure, right? And also where it breaks out below, it can't have tapped 79, right? It has to be a small breakout below and then liquidity grab to come down. But that's the sells at 90, right? I'm understanding that here it's these top wicks. If you look here, right, it's the top of this range. On the 4 hour, and then if we go to the hourly, what are you going to see in terms of the range? 1990 is the top of this range, right? All of this. If you grab liquidity here, then you came down to 72, which is where we're looking for buys, and then you can get the sell and then the buy. I would say in the order of things, if you get the sells first, then cool, you can get into the buys afterwards. But if you get into the buys first, you cannot get into the sells, right? Because the order of things is very important. If you're getting into the sells, you're understanding that, okay, you're selling for price to grab liquidity to continue the bullish motion up. But if you're buying already, then you're understanding that, okay, we already grabbed the liquidity. So you don't need to take any sells to come down, because those sells don't make sense anymore, right? And the sells that do make sense afterwards is if you potentially fill the range all the way up to like 2000s or whatever, and you need some short-term liquidity down like 94 to start continue popping up, right? But yes, that is basically. So I'm gonna put. I want to put this here, and then I'll look for where this is. Sells wicks here. Pretty strong level, I'm not gonna lie. 1990.555. It's really not bad, guys. Just wondering, can I get any higher or is it any lower? Might be a little bit lower, guys. I'm just gonna move it down a little bit. Yeah. Because if you're respecting all of this, respecting 85, respecting 85, all of this. I mean, you might only get like top wicks here, but you've already tapped into 86, 87. So I can't take those once it just taps. It needs to break the highs, right? And in any case, if it wants to continue driving up, you have this. You see this? Where you have that quick rejection, which is like, I mean, this is the 1 hour chart. This is still, that's like a 30 pip rejection. 28, 29, right? So you're taking the sells down to there, closing at 20 or whatever, or going break even, and then just, if it does reject, then cool. Then it starts going up, right? But at least that's where we're looking for price to make a decision at. Like all of these times as well, right? All of this here. It's not a bad position. Yeah, okay, so in the case that price does just, you know, drive up, I'll be looking for those sells around there. And then the stop's probably above this candle high. So how big is this stop? Oh, it's not even that bad. Guys, it's only 70 pips. Imagine that. But yeah, if it is above 70, or around here, let's have a look. Is there any other stops I would use? So last time you came up, because if it does start driving, right? If you start driving above those sorts of areas, I'm worried that you're just going to be in here, or you're just going to start driving straight up to 24 or whatever, right? So yeah, the stop loss I think will probably be maintained at around 70 pips, so around here, 97. Yeah, once you break there, I'm pretty sure you're just going to start driving up. Yeah, I can't use this as well because once you break this, like, yeah, it's a little bit far. For exactly like what we're actually looking for as well, it's a little bit far. But yeah, that's the basic analysis for today, I would say. And we also do have a level at 90, 92 and 2.6. I'd say those are probably my pineapples. If you ever come up to 92, guys, I'll probably look for another sell. But I understand they're relatively close, so I just don't want to be in a situation where I've missed this, right? Because this drove, we're understanding we need liquidity. This drove and grabbed liquidity for 130 pips, right? Exactly where our buys are. So yeah, I don't want to miss out on that, right? But yes, that is the overall analysis. So I'm gonna let some boys out from the Zooms, and let's see what they have in terms of questions.
Hello.
Hello. I am fantastic. How are you doing?
Yeah, good, thank you. Good.
May I order some Papa John's? How do they fuck up like literally on the side the sticker, it says barbecue meat feast, and then inside they fucking put a Hawaiian pizza. Like how does that work?
Like
what the fuck? Anyways, yeah. Yeah, man. What was your question, I guess?
So earlier when you were drawing out the you're arranging respecting support, and then you drive down to grab the liquidity to go up, and you're sort of anticipating that okay, we're going to need some sort of liquidity above the range before we get that drive down, if you were.
Yeah.
So my question is sort of what sort of time frames are you looking at, and then what sort of closures or scenarios would make you think that we should be taking the buys? And just to give a bit more context, basically what I've seen is that sort of play out, but then you've had some fairly hard time frames, like you have 1 hour closures below those ranges, and then I was sort of questioning, okay, like, is this a liquidity grab, or is this just, we've got an hour closure, is this just it changing trend,
Yeah, so I guess the first part of the question, which is like I guess like kind of breaking the highs to come down, right? Overall, I mean, I think you understand why we look for that, right?
Yeah.
In general, I would say, like, yeah, for those who don't understand, I mean, if you just look at the 4-hour chart, like, look, you ranged here, broke, came down, ranged here, broke, came down, right? You want to start going up, right? Ranged here, you broke, came down to grab liquidity, and then you start breaking these highs. So it's just, yeah, general market structure. But in terms of your question on what time frame I'm looking for, the wick where it's going to grab the liquidity will be on the higher time frames, right? So like probably 30 hourly and 4 hour. In terms of the lower time frames, what you're going to see is a range. So it's going to be more confusing on the lower time frames. But that's where you need to kind of be able to differentiate. Okay, so is this 5? Because the 5:15 is going to have more noise, right, than the 1 hour. The 1 hour closure is going to give you a lot of information, right? A 5 closure is going to give you part of that 1 hour information, but it's only a small bit, right? So, for example, this wick here is a 5 range going up, but this was just a wick. So this is a lot of noise, right? Because if you're just staring at the 5, this doesn't mean anything to you. Whereas on the wick, on the 1 hour, on the 4 hour, this wick means a lot, right? It's a rejection, and you've now closed here, all right? So I would say, like, as you're going down, you know, starting from the daily, starting from the 4 hour really, because the daily is still too big of a candle to use in terms of like liquidity grabs. Like you can, but then there's like really higher time frame moves, and you might like start driving really aggressively in those like aggro days. But like 4 hour, I would say you're looking for liquidity, hourly, sometimes on the 30, depending on structure. So I think for this trade here that we took after I took this flip to come down, it was a 30 flip, right? So that made sense to me. So 30 sometimes works. 15 and 5, I would say basically like very rarely, unless it's like a very steep liquidity grab. Yeah. What was part 2 of your question?
Essentially, I understand about the 5 and 15 is a lot of noise. That's basically like the range, which is the wicks for the higher time frames.
Yeah.
But I've seen sort of the range play out, and then like a 1 hour closure below, for example. I'm thinking, like, how do you sort of differentiate? Is that a fake out 1 hour breakout, or is that like an actual closure to carry on direction?
Okay. So for example, in this case, if you had like a closure below 78, is that a fake out to go up, or is that going to be continue driving, right? I would say in that case, right, you always have to be worried that it's going, like, it can be a fake out, right? You're very bullish at the moment, but that's why the structure ahead of time is very useful. So, you know, how the candles print leading up to this point, like the hourly candles as well are very important, right? This is the 4 hour obviously, but the hourly candles, yeah, so how it's looking at the moment is still okay for now, right? You haven't broken these lows. We're expecting if you want to start driving, you need to break these lows at some point, right? If you do break these lows, cool. And you haven't broken all these highs, maybe you can get a buy. I wouldn't say here it's a little bit too close, so maybe around 72. But as it's doing this, right, you're expecting, okay, the hourly is, close respecting, you're probably going to come down to fill the range, right? Or at least you're going to create a bottom wick for this and then start driving up to fill this range, because this will be liquidity for you to fill the range, right? So that's what I'm looking for in terms of like, okay, is this going to be a fake out to come back up? So in terms of market structure and where that plays in is, I'm not taking any trades here, right? I mentioned that the buy here is if we get, structure breakouts above 85 and then a bottom wick to here, right? So if structure is just like this, and then you suddenly get something like this, I'm very worried it's a breakout. At this point, I'm like, I wouldn't take this trade because I'm 50-50 at the moment. This could be a breakout, this could be a continuation. I don't know, right? But for example, if you get this, right, you get a bearish candle and then a bullish candle respecting, right? And then you just come down with no top wick on this. Cool, there's a higher level of confirmation now. Like maybe I'm thinking, okay, like 70% chance this is going to come out, right, in the form of either it's going to create a top wick before driving down, or it's going to be a flip to start filling this range, right? So at that point, this structure may be about 70%, right? But then if you have something like this, a breakout, liquidity grab, right? At this point, my overall thought process is, okay, if you had let me draw this in terms of actual candles, actually, like, because the lines don't do it justice. Yo, let me annotate. So for example, you get like a closure above like this, right? Your next candle, ideally, like what is the best case scenario, right? Is this. Does now this, right? You've respected. So cool, you're in this next range now, right? So any given point, you need liquidity to fill the range. Come down, liquidity, start flipping up. So that's going to be my position potentially, right? And then, oops, no, I don't want to do that. But the one step below that, I would say, is if you potentially get something like this. Like, there's so many different ways price can play, like, and each one will have a different level of confidence attached to it. So for example, if you had like, you know, what is this? Is there something here? Okay, never mind. But like, let's say you had this bullish above and then you had this bearish with no bottom wick, right? Sorry, no top wick, something like this, coming down. Like, cool, am I still expecting this to flip and start going up? I don't know, right? Or in the case where you have a top wick but you have no bottom wick, like, what does this look like, right? This could be a fake out to continue up, right? In that case, maybe I'll look for, you know, the next candle to have a bottom wick, right? So something like this, bottom wick, flip, break these highs, and I'll look for something like that, right? A breakout above there, right? So there's so many different ones, but you need to, it's just general, like the structure needs to make a lot of sense to you. And that has to be like this, maybe on like the 15, right? And in terms of the hourly, what is this going to look like? It's going to look like, you know, potentially, if you're looking for the buys around here, right? Let's say you, actually, let me just draw this candle slightly longer down. So let's say you got like this, right? Which is slightly more rare, but in the case that this is like your 15, your hourly is going to just look like this at the end of it, right? Oops. Your hourly is just going to look like this. So what happened previously in those hourly candles, right, is potentially, you know, you closed, you know, you're closing potentially like bearish, like this or something. Then you get a breakout above, right? So you still overall need to be respecting certain areas, right? Ideally, you get a breakout above certain areas before, like on the higher time frame, but not necessarily it always gives it to you, right? So you on the 30 it might be a breakout and then you start pushing up, but on the hourly or the 4 hour you might still be in this range, so then your confirmations don't go all the way up, and then at that point you have to ask yourself, okay, so is this enough confirmation for me to take the trade? Yeah, but it's that's kind of like going into confirmations across and how you're going to use all the time frames to your advantage, right? Sometimes, right, we get into trades where not every single time frame aligns perfectly, right? And it's natural because, like, if we're waiting for that all the time and for every single setup, we'll get like one setup every month. But
Yeah.
if we're understanding that, okay, price needs to grab liquidity, once it's grabbed liquidity on some time frame, which is like, you know, 30 hourly or 4 hour, and it starts flipping, I'm understanding that at that point the higher time frames start overpowering the smaller time frames. So I don't need as much confirmation on like the 5-15, but I'm looking for extra confirmation by, you know, potentially like a 5 breakout or whatever. And then that's, you know, okay, cool. Then the 5, at that point I've got my breakout above after grabbing liquidity on the higher time frames. So cool, that's enough confirmation for me to, you know, say that there's a high chance price is going to tap the next advantage level. Yeah.
Yeah.
And also, I would say, just generally, this just takes a lot of time. Like all of those that, like, there's probably like 40-50 different combinations of how price can interact with like 6 candles, like in this range and also outside of this range. Like, there's so many. So like, it's just about experience and like understanding, okay, every single time this happened, you know, what did we take? You know, for example, like this no bottom wick here, right? Last time you had no bottom wick here as well, after tapping into these areas. So are you going to get a repeat of this? just to come down. You could just not break any of the highs, but this was bearish, so you did break the highs before coming down. So I'm expecting, not this to be this the same move, but a bottom wick regardless, breaking this to grab potentially liquidity to go up, right? So I'm also looking for bottom wicks to go up and stuff like that.
What if you get like a breakout above, and then you
85.
get a breakout in the opposite direction below?
So you get a breakout above 85 and then a breakout below here.
Yeah.
Okay, so at that point I need to ask you about wicks, right? Do you have wicks for those candles?
There I go.
So for example, right, let's say you get a breakout here. I'm not going to draw the wicks yet because I need to ask you, but let's say you get this then,
Right.
and then you get this. Okay, so does this have a wick, this green candle?
Yeah.
Okay, so top and bottom wick. Okay, next candle, does this have a bottom? I guess this does as well. All right, the more
Yeah.
important one is, does this have a bottom wick?
I guess that depends on the scenario, right? So if it didn't have a bottom wick, then I'm thinking that's more likely to be a fake out,
Yeah,
or it's going to come back up.
yeah,
Right? But then if it does have, if it has a top wick breaking the highs, and then also a bottom wick, I'm thinking, again, that's also more likely to come down.
Yeah. yeah. And also one other thing you have to think about is, where is the most recent low? Have you broken it? Right? So if you've
Okay.
broken it, then cool. You could be looking for, because you've broken the highs now, right? Once you've broken the highs, then you break the lows. Cool. I'm expecting price to come down, right? Whether that's coming down to grab liquidity or whether that is coming down in terms of structure, it matters in terms of how many pips we can catch, right? But that's what I'm looking for. After you've broken these highs, then you break these lows, and then you broke the most recent lows. Yeah, cool. I'm bearish at that point. But for example, if you just get something like this, even if this breaks the low,
Yeah.
but it doesn't break any of these highs, I'm expecting price to come up to break the highs before you can flip,
Right, okay.
right? And
Yeah.
the more important thing is, if price doesn't do that, I don't have a trade, right? Because that's the confirmation I'm looking for. At least for sells, right? For sells below here.
What provides?
If you were looking for buys, right, and then this happened to come down, I'll then be looking for breakouts above here.
Any breakouts, okay.
Yeah, right. So at any given point, because this, I don't know if this is a change of structure or whatever it is, right? So I'll probably wait for this to happen. So something like this, and then potentially a breakout above. I'll need a bottom wick, right? I'll need a bottom wick. I don't know how steep, but ideally you get something along the lines of a celery, but I know that you don't always get this sort of play. So, but if you do, this is the most ideal setup, right? Where you have this bottom wick breaking these candles ideally, and then a flip to go up, right? So that's my position. If that doesn't happen, then cool. The best thing I can hope for is this just coming down, breaking these lows, and then a flip to go up, right?
Yeah.
But if that doesn't happen, and then you just whatever happens, right? It needs to create a bottom wick first. If it starts pushing up, then I'm worried it's going to come down, because this could be a fake out to come down.
Yeah, but I think we got the closure broke by the lows, and then a closure back above.
Okay, so for example,
high confirmation.
yeah, so I mean, once you break these lows, I'll probably have a buy stop anyways. On the flip.
And if
Or-
it didn't break the lows,
If it didn't break the lows, and then you had something that kind of did this, right? I'll wait for the next candle to break these lows. Or, if it starts pushing up like this over time, then maybe I'll look for a break of some of these lows, or the breakout of the next range, and then a break of some lows to start going up.
Right.
Alright, so
why does it need to create even steeper bottom width after the breakout? We've already had that break of the low.
Yeah.
Closure above.
So essentially, right, once you have this closure above, it's indicating that, okay, you grabbed a little bit of, this was your pullback, and you pushed, but you didn't push very far, right? So depending on how this candle closes as well. So in the case where you actually have something that looks like this, right, and it just pushes, then cool, you've missed the move. right? Obviously. But in terms of what is like something that we can catch, what we're looking for, it's for it to break lows and then flip. Because if it doesn't at any given point, right, if it has just like small wicks like this, and like small candles, small wicks and whatever, it's struggling to go up, right? This is the kind of trickling stuff that's going on. So if it's trickling, what are we looking for? A break of all those liquidity to start going up. Right, and then like potentially, I don't know, like down here or whatever. But that's why, like, because this action here is indicating to us that it doesn't have enough liquidity for us to continue. So a grab of liquidity, a buy stop here to start flipping to go up. Does that kind of make sense?
Yeah, I guess I'm still sort of not 100% on why we need that really steep wick after we've got the break of the lows. Is that because you've got the closure as well as the break of the lows?
I would say generally, once you broke all these lows, it depends where this low as well, right? So if this low was actually like, if you broke this low like all the way down to here, or like, you know, a steep bottom wick, then cool, I'll take this off the rip. I'll have a buy like as it breaks these highs even, right? But if it breaks this low, like, you know, it does something like this, I'm understanding that, you know, the liquidity that was grabbed below this level is only from here till here. It's a very small amount of liquidity. So for the push up, the push is I would say is comparable to the amount of liquidity that price grabs. So if you've got a small liquidity grab, I'm expecting some push. But if you get a really steep liquidity grab, I'm expecting more push, right? So if you get this small liquidity grab, cool, I'm expecting it to push. But if you get something like this, then I can't take it, right? Because at any given point, this could be the push. And then the next candle could just start flipping down, right? But then if you break all the lows, like if this next candle here breaks these lows and then flips, then I'm understanding that, cool, you grab more liquidity to start going up. And then at this point, then you've grabbed extra liquidity on top of what was here to assist the push going up, right?
Yeah. So with that one, with the break of the lows,
yeah,
is it the same idea as like, okay, there's no reason as to why we would like break all the lows so far and then come all the way back up?
Yeah. So I would say the main point is this low, right? I would say it can't break this.
Okay, yeah.
Because if it breaks this, then at any given point, this could just be liquidity to start pushing down, right? Because you did get some closures and you have wicks here, right? So that's what I would be worried for. But if you don't break all of those lows, but you have like a very steep wick, breaking some of the lows and then you're starting to push above, then yeah, cool. But once you break these lows, I'm kind of worried. Like suddenly my confirmation level is like, again, like what's going to happen? You know, I'm slightly worried there.
Yeah, got you.
Yeah.
Thank you.
Yeah, no worries. It's complex, right? It's not easy.
Yeah. There's many different things you have to think about.
Yeah, like every single candle closure, like what does it mean? You know, how does that affect every single other candle? And then also it's like exactly, you're not even working on one time frame as well. You're working on like what, 7 time frames? And it's like, whoa.
Yeah.
At that point, it's just like, holy shit.
Yeah.
But yeah, let's see if any of the other boys have questions. You're right there, Jacob.
Yo, I'm driving again.
You're driving again.
I'm just listening.
Do you always
Yeah.
drive home at this time?
Sometimes I'm on the road, sometimes I'm not. Just depends.
Okay. Where'd you go?
Just to do stuff.
Okay, fair. Man's delivering pizzas and delivering me the wrong fucking pizza. Piece of shit.
That would be a long drive, sure.
That's a pretty short drive. Just a couple thousand miles. You're right there, Johnny.
Yeah. I mean, I could talk briefly about this fake out that I looked at.
Oh yeah, where was that?
Yeah, 15-minute candle at like 1985-ish.
Yeah, this.
Yeah, I looked at this, went, this is looking good, and then it didn't have a top wick, and I went,
Oh. Okay, so
fuck
you
it
got into
anyway,
like a buyer as it broke these highs potentially.
I was looking for a buy on closure,
Okay.
and then I was like, you know what? I'm just gonna take the buy anyway,
I
despite it
see.
not having a top wick. And I was like, there's like a solid 50% chance at least of this just flipping down.
Yeah.
But I was like, I might get away with it.
Yeah. I've done that multiple times.
Yeah. And then I had another level like 1983 or something, and
Around here. Yeah.
yeah, and it did sort of respect that level initially, but
Yeah. I would say though, like, you know, where did you get the buy? Like off the rip here?
yeah, literally, I'm
Okay.
pretty sure I just took it off rip.
Yeah, yeah. And you probably got slipped, so you're actually above the candle. But yeah, like in
There wasn't too much volume at that point. So
yeah, it's a good
I
point.
don't think I got slipped.
Okay.
I
Yeah.
mean, the spread on my broker is just permanently at least 20. So
Yeah, yeah, yeah. I saw 4 pip spread like 2 days ago. I was like, that's like half of my advantage point. Like, what the fuck? I can't take that. But I would say like if you go into the buys, obviously like we know it's not the best buys, right? But
yeah,
you're understanding that you're very bullish. If it wants to come down, you're probably gonna break the highs to come down. It just depends on like how willing you are to just wait. Right?
the thing is, I'd already taken a buy today earlier and got my 18 pips.
Yeah.
So it's not even like I missed taking a piece out of the move. It's
Yeah,
just
yeah.
I just went, why not?
Yeah. One of those
And
days.
sort of went, it might be alright, because even if it comes down, I think it might hit the 83 level and like come back up a bit, so I can probably pineapple into a position and break even.
Yeah.
It's just, if I'd actually stuck with that thought plan and pineappled at 83, I would have been break even on the next candle.
Yeah.
But I didn't. I took one at the break of the 15 lows of the.
Like here.
Yeah, if I'd taken a pineapple there, then I would have been break even. But I
Break even,
didn't.
yeah.
I took one at like 1984.2
Oh, so
or
around
something.
here. Yeah, these.
Yeah, and the break of that instead. So it came to within like, I don't know, 5-10 pips of being break even or something. But I just let it sit. And
Are you
run.
still in the trade now?
No, it hit the stops.
Oh, okay.
Because the stops were only like. Wait, what were the stops? I'll be able to see. The stops were set at 1982.
Right. Okay. Fair. Like this low here.
Yeah, because I had a level at like 1983 as well, so it was like that's below a resistance, like below
Okay.
the support,
Yeah. Fair
and
enough.
below the break of the lows as well. So
Yeah. I would just say that like because you're working off the 15-minute time frame, which is what we would call a relatively smaller time frame. Like you understand that you're probably to break up as well, like past this no wick candle, you probably need some liquidity to go up, right? So you probably need to break some of these lows to come down. So that's why I'm like, how willing are you to hold? Because if you aren't, then you just close, at a loss or whatever. But if you're willing to hold, like I would say there's a high chance you could potentially get a pineapple, like towards these areas, or potentially down to like 79 or even 72, depending on where your stop is, right? If it's too far, then yeah, obviously not. But then there's a higher chance you get out break even in terms of that pineapple. But it very much depends on your trading style as well, I would say.
I mean, if it'd been a higher time frame move, then the stop loss would have been a lot lower.
Yeah. Okay. Fair. Yeah.
It's just that I was just like,
Generally, when I see these pushes, like Because even when it comes up to these areas, right? Like just before this wick here, I'm worried. Is this going to be it, right? Is it going to stop? So I don't take buys around here. Once it breaks here, I'm usually just straight in. Because I'm expecting the next higher high to be produced.
Yeah.
But then like when it does, when it's pushing to create that higher high, I can't look for any sells or I can't look for any buys anymore because I don't know where it's going to stop. It could just stop anywhere. And at that point, taking the sells are risky because it could continue pushing. Taking the buys is risky because it could just stop. Right? And the stop, you know, as we were, you know, saying previously with, I think, where was it? Some of this, right? Like I was in, you know, say you were in a buy around here. It took you how many hours to get break even? Like 17 hours, right? So this, when it pushes up, you could have like a bit of liquidity being grabbed towards the end of the push to come down to range at a lower area, right? And when that happens, you know, then it's a little bit more annoying to kind of hold the trade because you're expecting it to break the lows before being able to drive up. So where are you putting that stop, right? Like all of this is clean traffic. You can't put it below here for like forever, right? Because that's way too far away. But yeah. I mean, it seems like you understand that that trade was, you know, not to your plan anyways. So I think it's fine.
Yeah. I mean, I was just like, it was basically just it's not shit. It's not got a nice wick.
Yeah.
Bang.
Yeah.
So now I'll just take the coin flip, I guess.
Yeah, fair.
Just to sort of see what happens.
Yeah, it's all good. Also, I think, you know, it's definitely a learning point because I've done that so many times. And like, for example, one thing that I struggled on for a while was just getting into sells as it's pushing up because I'm like, okay, I need some liquidity. For example, like days, I think similar to these pushes here, where it's like it's grabbed liquidity, then it's just creating these highs, right? Then you have no bottom wicks on these candles. I'm like, oh, okay, I'm gonna take a sell, and it just never comes back. And I keep stacking and whatever, and it just hits my stop loss or whatever, right? And it's like, well, fuck. And then I stopped taking those after I learned my lesson. Like I took sells here, I took buys here, I took sells here. Like, you know, trying to predict exactly where it was gonna be, but like, yeah, you know, you live and you learn.
Yeah. Someone in Don's chat today said they'd held from the 1984 fake out thing.
Yeah, like 18 whatever, right?
Yeah, and I'm saying it was the same trade that I took like 2 weeks ago or something. It's just their stops must have...
Like, what the fuck are the stops, right? Like, are you trading the yearly time frame or something, man? Like, what the fuck? It's insane. Like, you just like, is this your stop down at like 1601? Like, what the fuck, man? But fair enough. I mean, unless they had like no stop and it's just, you know, full margin or whatever. Yeah.
No stop.
Chat trades are very interesting sometimes. Yeah. Any other questions? If not, I'm gonna start looking at the live chats.
Just a really quick one. You know, we just spoke about that trade there. Would sells at sort of around the 1990 level after the 15 no top wick being valid?
So
if you're on the 15.
Yeah. So I think I know what you're saying. So for example, you kind of were in like this situation or something. Like I guess like here is still fine.
Before,
like here, right?
I was thinking more like we just closed above no top wick.
Yeah.
If we moved up straight away.
No.
Up to 1990.
You cannot take those. No, you can't take those. Why? Because like at any given point, right? Look at these candles here. You had no top wick here. You're right. You grab some liquidity, but you just started pushing, right? Like the candles when it's like very bullish and you're part of this, you're still part of the main move, right? You haven't started consolidating yet. So when it's doing that, this top wick is literally a 50-50, right? And as it comes up to here, it doesn't need to reject, right? If you go back to the weekly time frame, right? We've been saying this week, like we've come down to 1930, wherever this was, right? Like down here, we've come down, so we've grabbed the weekly liquidity. I am now potentially, as it pushes up, I'm bullish towards 2060 or 2020, 29 or so, whatever it was. So this is just a small part of that move. I'm understanding that it's gonna, come back, draw down, or what, come back, grab more liquidity to continue up on the smaller time frame. But this could just be the start of a push going up. So it's very much 50-50 here, I would say. Like even the sells here, it could just very easily drive through. Like all of these ranges as well, right? Like ignore some of these lines, but like this just drove straight through, right? This drove straight through. This was a range as well. Drove straight through first, and then it could just not stop. So
it's like sort of in building a higher time frame into the low time frame structure.
Yeah. So how I could get sells now at 1990 or whatever above is what's happening here now, right? You've closed back down into this range now. So cool. If you do get a top wick, breaking these highs, potentially breaking these highs, I can look for some sells to come down, because I'm understanding you haven't broken these lows, right? So once you start breaking these lows and you start, flipping, then yes, I can't get into any sells. But when that hasn't happened yet, you're still ranging, and you need liquidity to continue up.
Oh, yeah, I see.
Yeah. Cool. Let's have a look at chat. Yeah, Connor, you're in the YouTube live again, mate. What the fuck is going on? They're usually during your lunch break. Yeah, I've had a couple people on Instagram telling me as well, it's not the best time for them because they're usually busy with something or whatever. But I don't actually have any other time available, sadly. So yeah, it just has to be at this time. But you occasionally come around, so just save all your questions for that one day, or you can just text me whenever, right? On Discord, just message me and I'll be able to reply to you. That's the reason you have the chat, right? Just use it. Yeah, I think I have a total of 1.5 hours in my Monday to Friday, which I can use to watch YouTube or whatever. Besides working hours, besides other personal meetings or startup stuff that I'm doing, or DVS stuff that I'm doing. So I think a couple of people asked me as well, do I do any one-to-one mentorship? I'd love to. I really would, because I want to get to know every single person who's trying to learn, and exactly how they're doing in terms of trading, what their psychology's at, and everything. But yeah, I mean, hopefully in the future, right? If this is a full-time job for me in the future, then maybe, right? But at least for the near future, it's probably not as possible. But yeah, cool. Guys, I'm probably going to end it around here. So we're about an hour in. So yeah. Oh wow, we have 40 viewers. Welcome everyone, I guess. Yeah. So just a recap of today. Right, sells first, then buys. If you get into the buys, you cannot take the sells anymore, because the sells are for liquidity. Because you're expecting liquidity to be grabbed before you're able to continue pushing up, right? But if you've pushed up after getting into these buys, then it's difficult, right? But the buys essentially at this level at 1979 is if you potentially start breaking above, not breaking these highs, right? If you just start ranging here, breaking above, and then you grab liquidity, cool, we'll look for these buys to go up, because you're showing that you have enough liquidity to break above. Some liquidity is needed to start driving past, right? But if you don't, and you get something like this, where you have something like this, no breakout above this, imagine this is below, then you get something like this, cool, I'll be looking for this position instead, right? And then the break even point for this is probably somewhere around this, this area, and the break even for this trade is probably somewhere either at this area or the next support around here, because you will need to break the highs before you come down anyways, because if this is bearish motion, right, you want to start moving down, you need to break the highs to grab liquidity to come down anyways, right? So it's relatively safe, both of these positions, but that's the kind of structure difference for these two. And for sells, essentially what you need to kind of see is price respecting, right? suddenly it just kind of wicks up to come down. So that's case 1. Case 2 is if it kind of does something like this, doesn't break all of these lows, right? But you know, you potentially get a bullish candle here, and a bearish candle respecting 1985, and then you suddenly come up. I'm looking for the range filled down to here, and then a continuation potentially. So that's what I'm looking for. But yeah, essentially that's today. So yeah, just I guess wait for a little bit more structure to be printed. Make sure everything aligns with you. And for all of those who are going to watch Wix's stream, you know, just look at his analysis as well, understand what's going on there, and then, you know, see if you can take any of his trades. All right? But, you know, always be trying to learn. So yeah, cool. Thank you very much to everybody who joined. Zooms, I'm probably gonna end it here, and I'll see you guys on Sunday.
Yeah,
But-
Sunday, thank you.
Yeah, see you guys. Have a good weekend. Yeah,
Thank you.
Yeah,
Yeah.
you too.
take a break from trading and just, you know, chill out. Yeah, see you guys.
See you in a bit.
And everybody on the live YouTube, thank you very much for joining the last day of the streams for this week. We're going to be back on Sunday for a live again, but on Monday it's going to be a private session for the members. So if anybody is looking to join membership, just message me on wherever you can find me, right? And then I'll DM you. The best place is probably Instagram, so just message EvolutionDVS on there. I think Don's posted the name multiple times, so you can probably find it on there anyways. But yeah, if I don't speak to you guys anytime soon, it will be on Sunday, and hopefully you guys will join the stream again then. But thank you very much for joining, and have a good weekend, everyone. Peace.